Well, what an earnings call once again for Tesla. I mean, seriously, if you look into the numbers, there are some amazing things going on underneath the surface, and honestly, I got no other word to describe it except for amazing. You guys know I'm not a pumper, so you know I'm not blowing smoke up your rear or anything else like that. They really were great given the challenges and sky-high expectations on Tesla. But I have to ask the question, is Wall Street setting up to screw Tesla stock? And I'll give you the reasons why I'm asking that question and why they may try and why I actually love it too. So make sure you like the video and subscribe to this channel if you like the truth without the hype. And we have improved slightly, but still about 34% of you guys that watch me regularly aren't subscribed. And honestly, right around only 17% of you guys have the bell turned on for notifications. So make sure you check that or YouTube won't show you my videos, unfortunately. Because, well, yes, YouTube is stupid. So Tesla had a great earnings call, but kind of honestly mixed results, beating on EPS, but missing on revenue, which I thought would be hard to beat given the delivery numbers. It wasn't a large miss or a disappointment, but it was still technically a miss, even though the vast majority on Wall Street didn't adjust expectations despite the record deliveries that just were not good enough for Wall Street, because record anything just sucks because, well, I don't know, Wall Street. I cannot wait for my main man Gordon to come on and talk about Tesla's demand problem or the inability to turn a profit, even though they turned a profit, or about how Legacy Auto is eating Tesla's lunch. It doesn't matter if other automakers actually compete in terms of having some vehicles to buy, but Tesla has a margin that none of them can touch. And oh, by the way, I'm sure he will conveniently forget to show you how the other automakers reported in comparison to Tesla in terms of growth or profitability or margin or anything else like that. And keep in mind, Tesla did all this during a high inflationary environment, and many of the items needed to produce the cars and just higher cost overall, some of which will come down, meaning margins will go up by default if they don't change a thing in the future. Oh, and it happened with the factories not operating at maximum efficiency and the newer factories and batteries and other innovations just now kind of coming online, which will increase those margins even more in the future. Just think about how juicy the entire balance sheet will look when the new factories get ramped up and are bringing money instead of costing money instead. But despite all of that, I think Wall Street will still try to take a dump on Tesla and completely screw with us as investors. And there are three main reasons for that. And honestly, guys, the last one could be devastating for Tesla stock, but don't worry, I have a solution for that too. So reason number one is Wall Street is still not sold on Tesla itself or Elon, or both really. Like it or not everyone is sold on where Tesla is going, what they are trying to accomplish, and what it will do for the share price ultimately. You also have many large investors that do not like Elon and his antics and would prefer a more, kind of buttoned up approach to running a company, suit and tie kind of guy, I don't know, whatever the heck you think of, whenever you think of that. Just look at all the recent Twitter drama going on as an example of what institutional investors absolutely hate. But we all know Tesla would not be where it is at today if Elon was not being Elon and doing that stuff. But this will continue to be a sore spot for now for a lot of those investors. And you add in the fact that on this earnings call, he makes claims about Tesla being larger than the two largest companies combined, and it gets a lot on Wall Street, anywhere from, the typical eye roll that anybody does when Elon says something, to complete disgust. Now, I personally like it. I enjoy the bravado, and there is a path to get there, but it is years into the future. And I know the Tesla bulls out there will say it's coming I don't know, next year. And then the bears will say it's never going to happen because Tesla is going bankrupt. And the reality is they are both completely wrong. The answer is maybe one day, just like Elon said, and the timeline is a decade or more, but the battle between the two is a major turnoff to many investors, and the fact that Elon even mentions it despite being a long way from Apple's market cap, much less Apple and Saudi Aramco combined, really turns a lot of them off. Sorry guys, don't be mad at me, I'm just telling you how they think out there, it's not me. The second reason is because a recession is coming, or honestly, we're basically already there, and that usually hits the auto industry very hard. For now, many view Tesla as a car company, and we cannot just dismiss that position altogether when the cars make up the vast majority of Tesla's revenue. Now, clearly they are better than everyone else and next level on all kinds of things when it comes to making those cars, but when dealing with Wall Street, they look very macro in times like these, and they're going to kind of lump everything together. And if the prevailing wisdom is that car manufacturers get crushed during a recession or a slowdown, you bet your bottom dollar they will look to try and punish Tesla, at least in the short term. And finally, we have the earnings call itself and the numbers from this earnings call. Now hear me out all the way through this, as it'll all make sense as I get all the way down through it. Here's the problem with these earnings coming into next week, given what we have already seen this week and the week before from the rest of the market. Despite all the doom and gloom about the earnings recession or earnings crash or whatever the heck all the noise was out there, it just isn't happening once again, it seems. I mean, we heard it was coming last quarter until it didn't happen. Now, to be clear, earnings were not great, I agree, but were absolutely not a disaster or an apocalypse as described by almost everyone leading into last quarter for the stock market. Which, of course, in true YouTube or media fashion, you just say,
well, it didn't happen this quarter, but wait until next quarter.
Well, it's next quarter and earnings have been strong so far. Lots of top and bottom line beats, strong guidance or maintaining guidance, and the banks were all across the board saying the consumer and businesses are strong and well positioned for anything that may come next year. But the great start to this earnings season and the potential for great earnings coming next week is where the problem is for Tesla. Unlike the previous quarters where Tesla was one of the big winners overall, this quarter, despite the numbers being great, they just didn't meet Wall Street's expectations and were mixed according to their analysis. And if Apple and the rest of the big dogs report very well next week and beat kind of all the way around, Tesla may fall out of favor and the big money may flood to those big dogs more than Tesla if the market runs until the end of the year. So what the heck happens then? Well, the truth is, this should honestly excite you if you are a long-term investor. Tesla is executing incredibly, and you can still buy shares at these prices and potentially even lower if Wall Street gets stupid once again. Wall Street gets stupid once again. If I could actually talk and not be stupid, that would actually be what it is. This is the exact scenario every long-term investor wants with every stock they want to own long-term. And that would be an extended time of incredible performance by the company, but the stock price stays flat or actually goes down. Then you have even more time to add shares. It happens all the time, and the longer it goes, the bigger kind of the rubber band stretches, and then when it finally pops and runs, it will eventually run, and then you have more shares than you would have had if it had run up a lot earlier. And then what happens is, people will FOMO into the stock because it came out of nowhere just like Tesla did in 2020. The reality is, Tesla didn't come out of nowhere at all, and those that bought for that previous 6-year stretch where it basically didn't go anywhere saw signs all over the place that it was going to be a beast at some point, and they got the benefit of that rubber band being pulled kind of so tight that not only did Tesla run, but it ran up big, and if they were adding that entire time, they would have had far more shares than they normally would have had, allowing them to build far more wealth than if the stock had not traded flat for 6 years. That is why I don't trade right there and I buy and hold instead and take advantage of every time Wall Street gets stupid and sends Tesla back down to my price target. That is how real long-term wealth is built. And do you want direct access to me to ask about anything or want to learn how to value a stock and see my watch list with price targets and my buy and sell alerts in real time and a ton more? Just make sure you check out the pinned comment and at least give the Market Insiders private group a shot. And click this video here if you want to see what I'm selling in this market. And click this video here if you want to know exactly how I plan to make big money in this market. So thanks for watching and we'll see you in the next one.